So, if you saw the last video on moving averages, I said that would just be introduction to moving average. Okay, moving average is actually quite voluminous, and you can't cover it in one video or two videos. So, this next video is about the importance of moving average, how you can really use it to trade like that. In the last video, I just showed us how to draw your moving average, how to plot it, and the general importance, the types of moving average, and all. So, in this video, I'll be telling us what moving average really does on the chart and how you can use it to your advantage and not to your disadvantage. So let's get to class and see what we can do in this video about moving averages. Continued. So this video is a continuation of where I stopped on the last one about moving averages. Now, if you check the previous video, I tried to explain to us what moving average is, the types of moving averages, and then how to draw them. So I covered the basics of the introduction of moving average in the last video. Now, I was saying that moving average is just more than a line that we draw on our chart. It has a specific, it has importance, okay? It serves more than one function on the charts. It does not just, some people will be like, okay, why should I have one moving average? Why can't I have 10? Why must I have 3? Why can't I have 1? So there are lots of arguments about moving average actually, but if you are not careful, you would fall on the wrong side. So this video is just about telling us the importance of moving average. Now, number one, the most obvious reason why you should have a moving average on your chart is because it shows the direction of the trend. Okay, it shows the direction of the trend. Let's see. Let me choose. Okay. Let me demonstrate with, let's say, GBP USD for example. Now, I explained why I have 3 moving averages on my chart in the last video. Okay, so if you don't know, you should probably watch the video to know. So number one is that moving average shows you the direction of the trend. Now, if you should look at this trend when it was here, okay, let's say when it was here, we could have used bar replay to just go back in time, but then that would take a while. But let's assume that the candles here, they had not formed yet, and then the first moving average crossed over, the second crossed over, and then the 3 crossed over. Now, if you've not forgotten, I mentioned something about moving average crossover. That's still for another video. I will tell us about moving average crossover. But then, now the 3 moving averages crossed over. It's an indication that the trend is about to go down because they were ahead of price before, and then they all crossed over. So as you can see, the market came down from this place to this place. Now you might be wondering, okay, market is here. How do I know that market is about to go up again? As you can see, this moving average started trending up, and then this one started trending up. That's a sign that the market is going up. Okay, so by just looking at your moving average, you would know the direction of the trend. Nobody needs to tell you that the market started trending up from this place because the moving average has been hugging the price from behind, if I could use it like that. So if the moving average is ahead of your price on the upside, market is going down. If it is below price, it is coming up. So another way we can put it is that moving average acts as support and resistance. You know, I mentioned something that besides the horizontal support and resistance, that we also have dynamic support and resistance. So moving average is a form of dynamic support and resistance. When moving average is below price, if the moving average is moving or swinging below price, it is acting as a support. Okay, if it is above the price, it is acting as a resistance. Now I would illustrate that to us. Let me just zoom in. Okay, let me just zoom in so we'll see. Now look at the moving average here. This is my 200. Now when price got here, it got rejected. Okay, throughout this line, it has been acting as either support or resistance, that price has not been able to break out of. If you check this, it has been acting as a support and resistance. It was a support before. Now it was a resistance at this point. It was a resistance at this point. It was still a resistance at this point that just pushed price down. and then price just boom, price was not able to break through. So imagine if I wanted to enter my trade here, I could put my stop loss ahead of this moving average because it has been acting as a strong resistance before. Okay, now if you look at this, the lowest one here, it has been acting as a resistance. It acted as a resistance throughout until the end of the trend. So the market trended from 10th of March to 20th of March. That's about 10 days. That's 2 weeks. And this line, this moving average, kept acting as the resistance that did not let price break through. So eventually, when price broke through, it became a support that kept price from coming down. So your moving average, more than showing the direction of the trend, it sometimes acts as a support or resistance. So if I want to enter a trade, for example, and say I wanted to, alright, after breaking through this major resistance, I wanted to enter a trade here, and okay, on a normal day I would have my support line here, okay, and say I wanted to enter a trade. Let's say this support line was not there, I could just come and enter my trade just below this moving average because it has been acting as a strong resistance, and then it became a support. So on and on and on it goes, each acting as support or resistance. Now remember I said each moving average here is serving a different function. Okay, they don't have the same function. Each has a role it plays in the market. So number one is that it shows us the direction of the trend. The trend here is clearly in an uptrend. Now imagine I don't have this. Okay, imagine I don't have this. Now we can say market is in an uptrend. It's a little bit obvious that market is in an uptrend, but if you have something like this, it further confirms it to you that yes, market is definitely in an uptrend. So it's currently coming up. This was acting as a major support. So when the moving average is on the other side of price, it is hugging price from the lower part. It is acting as a support. When it's on the other side, it's acting as a resistance. So number one, your moving average acts as it shows you the direction of the trend. Number two, your moving average acts as support and resistance. Now, number three, your moving average tells you key price areas where you can enter your trade. I think that is one of all the functions of the moving average. They are all important, but that one seems to be the most important function. It helps you to highlight key areas in your price that you can enter or exit your trade. It's more like using your support and resistance if you know how to use it. For example, let me use this example. Now, the market here has not really been doing anything all along. It's only if you are someone that just wants to get into the market and get out in about, if you want to take say 20 pips, that you can enter the trade at this point. So the moving average here, the 200, has been acting as support. At one point it became resistance and it was not sure what the market was doing. So when it started trending up, we saw that this was a major point that became our support. Now if I wanted to enter this trade, remember I said you should not enter the trade that is well on the way. You look for either a pullback or a retracement. Now if I wanted to enter this trade, you would look to enter the trade at this point because it is a major source of resistance, or it has been a major source of resistance. Okay, so it shows you key price areas, or key areas that the price has respected. See, it has respected it here, it has respected it at this point and also at this point. And it's a good thing if you want to enter the trade. Now let's say you missed the trade and you could not enter the trade. Okay, let's assume you could not enter the trade at this point. Okay, so if you don't want to get here, look at this one here. The function, the moving average here is 7. Remember I told us in that video that the reason why I don't have 1 is because it's possible that it will break through 1 and then you would think there's a breakthrough, which is in fact a false breakout. Now if you check this place, there was a slight breakout. Imagine if I didn't have this second one, I would probably have thought, okay, price is about coming down, but I could see that this second one is still going up. It happened again here, it happened again here, and then it has always been happening like that. So for me, if price does not cross this second moving average, I don't think the market is about to trend down. Now look at what happened here. It was until it crossed that then I was sure that okay, market was going to keep coming down, and then it's about to cross over, and it's an indication that market is well on the way of coming down. Now let's look at another pair to just try to let's see Aussie dollar, to see what Aussie dollar is saying. Okay. Alright, so it's it's almost the same thing. It's almost the same thing. Now, the moving average is trending down. This is clearly showing us that the market is in a downtrend. But let's say you did not have the opportunity to enter the market at any of this point, and you really want to enter the market. This 200, it's a very good indication of when to enter the market. As you can see, the market came up to test the point, and then as should be expected, it rejected it. Now this is a very good place to enter your trade, because it rejected it, and the rejection was a very strong rejection, not just a weak one. Then after rejection, it started coming down. So let's say if you wanted to buy, if you were A and you wanted to sell, if your market already got A and you didn't want to enter, you could just wait for price to hit your moving average and then wait for the result. See, it was rejected here again. So your moving average tells you key areas that price has respected and that it will definitely or most likely keep respecting in the future, and you can always enter. So if I want to buy or sell, I would look to buy or sell at the point that price hits my moving average. Okay, so as you can see, when price hits it crossed over here. There was a crossover between these two, an indication that price is most likely going up. But I would not want to buy until I see a definite cross of this 200. If you look very carefully, immediately it touched it. We had a bearish candle, but fortunately it was able to break through. And then when it broke through, the moving average started acting as support and resistance. So your moving average tells you where the trend is going, whether it's going up or it's going down, and then it acts as cushioning. If we look at this point very well, there was a little bit, it didn't quite touch it, but then it was still a little bit of a touch. This was still within the zone, and then it was pushed back, and then price started going up, and all like that. So if we go further, there was another touch here. You know, if you were just using one, you would think price has broken through and you should start going. If you were still using one, you would think price has broken through and should start going bearish. But it was a false breakout, and thanks to my third moving average, I was able to know and just kept on doing my thing. So your moving average is very important in trading. It lets you know the direction of the trend. It acts as dynamic support and resistance, and then it lets you know key areas of where you can enter to either buy or sell, and then you might even be able to take your profit from that price, for example. Although I would not recommend it so much, but if I was sure that price was definitely going back up, I knew it was going to touch this point. Okay, so I could just take my profit here and leave the market, but I don't advise that you trade against the market. You should always trade in the direction of the market. So basically, your moving average lets you know the direction of the trend. But while it is doing that, it acts as support and resistance, and then it lets you know where you can enter the trade to either buy or sell. There will be bounces. The more the bounce, the more or the likelihood that the support and resistance is actually genuine. Let me look for one more, say Euro odd, to just a little bit of confirmation. Alright, so as you can see, the 200 did the same thing that it did in all the pairs that I highlighted. Wow, I love this cross. Now look at this cross. It's massive cross. Market has been trending up. And then when it got here, it was rejected a little bit. It did as if it was going up, but there was a moving average too that was coming, and then there was a cross. There was a cross between the three. Don't worry about moving average crosses. I'm going to explain moving average crosses. But then, just so you know, it starts showing you the direction of the trend. So this was hugging price, and when there's a little bit of breakout, this one would act as support resistance rather, and then it will push the price down. And then price kept coming down, and when it looked as though it has broken through these two moving averages, this one started acting as the major resistance that was pulling price down. So when there was another cross, you would see that price assumed another position. So for here, we didn't really know what price wanted to do. Does it want to go down? Does it want to go up? So this is the kind of choppy market that you should not really look to trade. And then at this point, it looks as though a range is starting to form. So that is what you use moving average for in trading, and it's always advisable that you have moving average plotted on your chart so I can know the direction of the trend, what the market is doing, key supports and resistance, and then when you should try to enter a trade. So if I wanted to enter a trade at this point, I want to enter here and then trade it down. So that's all for this video.